Here it is, already November, and we're getting close to the end of the year, getting close to the holidays when we're going to be so busy. So now is a really good time to pause and look at your tax planning for this year. You have time, if you do that now, to possibly make some changes that would improve your tax position this year and going forward. The first thing that you should do is look at last year's tax return. What income did you have and what taxes did you pay? Then consider this year's income year to date. Is it lining up to be similar to last year? Are there some differences? Do you have some bigger amounts of income this year? Do you have lower income this year? Those can help you decide what actions you want to take or need to take. Then, number 3 is to begin to think about the strategies that you could use to improve your taxes for this year and going forward. How much room do you have in the current tax bracket that you're in? Do you need to bring yourself down a tax bracket? Like, are you over a limit that you didn't want to be over? Or do you have some room to fill up a lower tax bracket? That again will determine what kinds of actions you want to take. Basically, you can try to either increase this year's income if you have room to fill up, or increase the reductions in income if you need to bring your income down for this year. Ways to increase this year's income would be trigger some capital gains, pull some income out of taxable accounts like an IRA, do some Roth conversions, do some things that fill up that lower tax bracket, pull the income into this year, but then have the benefit of using that next year and beyond by placing it in a better place. Some ways that you can reduce your income tax for this year would be to increase those deductions. You might be able to bunch up on some medical expenses or some charitable giving in order to increase the itemized deduction so that it's more than the standard deduction and get some benefit from that. Now, if you're over 70 and a half, you could use qualified charitable distributions to get money out of your IRA to a charity with no tax. But if you're not over 70 and a half, then you can use a donor advised fund. You can still use a donor advised fund over 70 and a half, just not from your IRA. And the donor advised fund would allow you to dump some contributions into the donor advised fund this year, get the charitable contribution deduction on your tax return this year, but then use those funds to give to charity in the future. When you're thinking about that, be sure and consider whether this year is a good year to do that or a future year might be a good year to do that. Because keep in mind, Tax Cuts and Jobs Act is supposed to expire at the end of 2025. And when that happens, then our standard deduction is going to go back to what it used to be, basically half of what it is now. And so that's going to give a little more room for making a difference using those donations to a donor advised fund. And so you want to compare what income would you have this year versus a later year, and which is the best year to use some of these strategies. And that requires getting the numbers side by side so that you can figure out where are you going to get the most benefit from any of the actions that you take. But like I said, we've got a couple of months left, so it's a good time for you to take a look at your tax planning for the year and determine if there are any things that you can do that will put you in a better position for this year's taxes and for future taxes. And if I can help answer any questions with that, feel free to shoot me an email. It is part of the type of planning that I do for my clients. And so I do answer those emails directly and want to help people minimize their lifetime taxes.